Do you want to react to the jobs report? What do you think is going on here?
Well, we made the argument over the last couple of years that the millennial dominance that would take over in the marketplace of economics would make it hard to slow the economy down, even with a severe Fed tightening. You and I have talked about this over the last couple of years. It showed up in housing, right? The housing recession didn't last very long because there's just too many people with too much money chasing too few houses. So that was going to be a factor. The irony is that led us to think that that it would make it more difficult on stocks. But this is such an amazing euphoria episode that just nothing stops stocks. Crypto didn't stop stocks. Memes didn't stop stocks. Beyond Meat and Peloton didn't stop stocks. And now a company can report 65 cents in quarterly earnings and be worth $140 a share. Mm-hmm. So you got everything you want in this particular mania.
That was an Amazon reference?
A slight humorous Amazon reference.
I'm just making sure I'm thinking, okay, what, for viewers who are going, wait, which one? Yeah, no, I know. Listen, we've talked about whether that part of the market is overvalued, and everything we've seen with names like Tupperware and all the rest taking off. What does that tell you? I mean, where do you want to be positioned if you're still in stocks, obviously, but you want to kind of avoid anything that might end up looking frothy in retrospect?
Yeah, here's a fun one to keep an eye on. So President Biden did kind of a brilliant thing by selling a whole bunch of oil at high prices. And the reason that was brilliant is that what you pay at the pump is probably 10 times as important psychologically to people's read on inflation as it is on actual inflation. Because what you pay at the pump is a very small part of your personal consumption expenditures compared to the last 50 years. We're down around the 2.5% level, and it used to be 4.5% or 5%. But psychologically, it is Americans' main read on inflation, right? You go to the gas pump. Totally. If the price is down, you think inflation is down. You go and it's up. And well, guess what? We're back to $83 a barrel, and those gas stations are going to be charging quite a bit more at $83 a barrel than they were at 66 a few months ago. So that is going to be interesting because they're all betting that game was over. But the most important psychological thing is about to hit the other direction. That's one way I would differ with Diane. I don't see us getting to 2%. And if we do, it'll be the most temporary 2% in the history of mankind.
I also noticed, maybe this is just my store, my town, I don't know what, but milk, eggs, chicken prices all higher by about $1 or so again this morning, which I found that a little unusual. Speaking of oil, though, you do own Oxy. So from the investor side of this, what are the plays here?
Well, we own Oxy, APA, OVV, Devon Energy. The more, the merrier, right? It's just going to be a great era because the prices are only going to go up. And if you're someone that wants a quicker, clean energy transition, the higher the oil price gets, the quicker the transition. So $125 or $150 barrel oil would cause people to make the switch sooner, but it won't cause us to not need the oil and gas. So we'll just get cleaner use of it. And so Oxy is at the forefront of the best combination. I think that's why Buffett likes it so much. Yeah. He's going to store carbon in the ground through Oxy, and he is going to have a delightful time selling oil and gas for the next 20 years.
So I want to ask you like two final questions. I don't know if we're going to have time, but let me just try to jam it in. I want to mention Barbie because Warner Brothers Discovery is a stock you like, although you don't typically strike me as the kind of guy who wants to invest on a box office hit.
It's just the tonic that this company needed. There just didn't seem to ever be any good news that would indicate that David Zaslav's effort to get back to copious free cash flow and improving the balance sheet enough to allow the earnings to show up in a big way. And I've already seen it twice. I think it's the best intellectual satire movie since Mel Brooks. In fact, I wonder if Mel Brooks was a consultant because I just busted a gut both times. it's a brilliant movie, and it's got serious legs.
All right, so let me ask you my last question then, which circles back to the market. You say we continue to believe that this financial euphoric episode is going to get solved with difficulty. You're in the Charlie Munger and the Seth Klarman camp. When you say solved with difficulty, are you talking about rate hikes, a market crash? What kind of difficulty do you foresee?
Unfortunately, euphoria episodes are incredibly good right up until they're terrible.